But we start first with breaking news out of Disney. The stock is moving lower in the after-hours session as the company announces some very, very major job cuts. Let's get right into our own Julia Borston with the big details, and these are tens of thousands, Julia.
That's right, Dom. Disney is laying off 28,000 domestic employees at its parks, experiences, and product segment. Now, that will affect employees across all levels, hourly, salaried, and executive roles. Disney is saying that 67% of those affected are part-time workers. Josh D'Amaro, who's chairman of Disney's Parks, Experiences, and Products division, saying, quote, in light of the prolonged impact of COVID-19 on our business, including limited capacity due to physical distancing requirements and the continued uncertainty regarding the duration of the pandemic exacerbated in California by the state's unwillingness to lift restrictions that would allow Disneyland to reopen, we've made the very difficult decision to begin the process of reducing our workforce at our parks, experiences, and products segment. Now, just to put some of this in context, Disney World, which has partially reopened, had an estimated 77,000 or so employees before the pandemic. Disneyland has an estimated 35,000 employees, and all of Disney, that employee base has been reported around 220,000 employees. So this is a meaningful piece of that domestic theme park division. Guys, back over to you.
All right, Julia Borston, thank you very much for that. I know that you'll be staying on top of that story and the developments there. So folks, let's trade this with Disney. Guy, I'll go to you first for this. I mean, we knew it was coming in some way. It couldn't have been that easy. We couldn't have gotten away that unscathed. In this kind of a scenario, with a theme parks business, is it going to have a longer-term impact in, say, the next 3 to 6 months? Are investors already looking beyond that?
Well, hey, Dom, again, great having you here. You know, maybe I'm just not paying attention, but I didn't see, it wasn't as telegraphed, for me at least, as maybe it was for you. So I think it is a bit of big news. Julia mentioned, and I read this is 67% part-time. Doesn't make those folks feel any better. And Disney probably employs close to 250,000 people. So you can do the math and see it's almost 10% of the workforce. At this point, you're trying to figure out where do you get in the name if you haven't. And if you go back and look, I know all three people on the panel can speak to this, that 118 level was resistance forever until it broke out on a number of different reasons, not least of which was Disney Plus coming to fruition. Stands to reason that 118 will be support. And you know what? Given the news and given the way the stock has been trading, we probably get there. But to me, what this speaks of is lack of clarity. There's no way that they would do this if they had clarity over the next 3 to 6 months, which clearly they don't have, and clearly is concerning given how far we are in the timeline of this COVID virus.
This is much more of a story about the portfolio of businesses that Disney has to offer from a media perspective. And maybe I'll turn to you for this one, Tim Seymour. As you take a look at the moves that Disney has made, there's no doubt it has underperformed this year, but not to the degree that other COVID-impacted hospitality and leisure companies have. Disney is immune to certain aspects of COVID. Are investors accentuating the positive on things like Disney Plus, ESPN Plus, the other parts of that media empire besides just the theme parks?
Well, one of the reasons why, and Dom, yes, great to have you again today. And one of the reasons why investors like me have held this stock for a long time is the diversification in the business. Again, we have a DTC business that's not just what we talk about with Disney Plus streaming, but obviously with their consumer products, their studios, their cable networks, and their consumer experiences, which we know last quarter. First of all, Disney crushed it last quarter on a relative basis because they actually controlled costs. And yet they had a $2 billion loss in this very business. So at a time when we've looked at this company for the last now 6 months with a slightly different eye on their balance sheet, I'm happy to see this news. And yeah, you bet, DTC, Disney Plus, leaning into this business. They've already hit the bottom end of their range between 60 and 90 million subs for 2024. They've got that now. So, to me, I'm happy to see Disney, as painful as this is, and this is indicative of more labor market woes we're going to see in this country over the next 3 months. This is important for this company to get as lean as possible. And last quarter, they showed $1.1 billion in operating income profit that no one expected them to get to. So I'm happy to see this news today.
Yeah, I think it's important that they're actually really trying to get a handle on their expenses. You know, the saying, never let a crisis go to waste. So here, maybe this is an opportunity for them to get leaner, to have some cover to do that. But remember, I mean, as great as the collection of properties are, between the hotels, the theme parks, the studios that can't release things in theaters, that's sort of having a little bit of a rough time doing, paying for that, like, you know, a Mulan. I sort of think that there's a little more downside to come because, remember, this company took on a ton of debt to do the Fox deal, 20th Century Fox deal. And so even if they start to get it together, the valuation is still expensive. It's a premier company. It deserves a premier multiple, but it seems to me to have a little bit more even of a premier multiple than where the business is right now or where it even will be next year.
Karen, can I follow up with that, though? From an investor standpoint, what's the most important part of the Disney empire or the Disney narrative, the story for you right now, given what we know about COVID, given what we know about the movie studios and theme parks? What part keeps you in the stock over the medium to long term?
Well, I'm not in it, but streaming has been the focus. Although, remember, streaming is actually costing them money. But that's okay. They need to spend. They need to be in the game. They're doing a great job of it. But they got to get those theme parks open. I know it's out of their control, but I'm going to wait and watch.
All right, so wait and watch. Dan, Nathan, it seems like a lot of folks are going to be waiting and watching. In fact, most of the analysts that cover this stock have a hold rating on it right now. There's probably a reason why. What exactly do you need to see to really get more bullish on Disney?
Yeah, I think, unfortunately, Guy hit the nail on the head right out of the gate. It's just a lack of visibility. You know, in this parks business, there's two separate scenarios. You know, they have the much smaller park in Florida, which has been open, but I don't think people are particularly going. And then the one in California, which they kind of complain a little bit about the restrictions that it's been closed. There's also wildfires there. There's a lot going on that I'm not so sure people are going to be crowding into those parks anytime soon before there is a vaccine for the virus or some sort of herd immunity. So as I think about this story, I'd say that this stock has actually acted pretty rationally. If you think when the stock broke down in February from 140, it went straight to 80. That's when the whole market was in a free fall. No one knew what to expect here. Bottomed out near 80 bucks, and it never made a new high. I mean, in a lot of ways, I think that shows a bit of investor skepticism here. So the fact that this stock is back towards that 120 level that Guy mentioned where it broke out from, I think a year and a half ago when they announced the Disney Plus, that makes some sense. If you can hang out here with this name, I think it makes a lot of sense. I think you start picking on this thing on the long side between 120 and 110.
All right, folks and viewers out there, just to kind of clarify those comments I just made, according to CNBC.com, right now there are 9 hold ratings on Disney, 11 buy ratings, and it looks like 6 strong buys, no sells, no underperforms, and the current average target price is $134.91.
Shepard Smith here. Thanks for watching CNBC on YouTube.